My colleague Vishwanath spoke to Pralay Mondal, the MD of the company. Here's what he had to say.
We did have a good growth on the deposit side, while CASA didn't grow as much. And the reason for that is overall systemic. I think there is a little bit of a challenge on the CASA side growth. The overall system has also shrunk in the last 1 or 2 years. And for us, I've said before that we are still building the CASA franchise. And based on all the building blocks which we are putting together in terms of systems, processes, technology, huge investments is going into technology. And the distribution, we are spreading our branches and distribution in more liability-oriented geography. So all of that, along with the sales team which we are building, we will need more customers into the bank. So we don't have a strong CASA franchise today, but 2 years from now, we will build that franchise and you will start see a sustainable growth on the CASA. Also, what is CASA? It's a function of how you use the account based on various EMIs, various other things which you use the account for. So we need to put those processes in place to build the CASA franchise. So I think tactically, we don't want to build CASA. We want to build it strategically. And hence, in the long run, you will see CASA growing in FY26 onwards for us on a ratio, as a CASA ratio as well.
So for the rest of this financial year, then we're not really expecting a big boost on the CASA front. Is that what you're saying, sir?
Yeah, I think broadly it will be similar because overall the deposit growth is faster than the system. And if you have to grow on the asset side and keep a CD ratio which is sustainable at a similar kind of a range, focus on LCR and those kind of things, I think we need to continue to grow our deposit and quality of deposits out there. So CASA also is a function of the denominator, overall growth on the deposit side. So to that extent, I think we should be happy being where we are today. But this is a story in the long run. Long run, we will grow faster.
Right. I wanted to touch a bit upon the fixed deposit side as well, the term deposits. There you're seeing a very strong 32-33% growth. What's driving that? And is there a bulk element to that at all?
I think our bulk element will be below 25% of the overall deposit franchise. So it's not very high. It is in line with many other banks in the system. But what is driving is the quality of the management which they put together, that they know how to get the businesses. We are addressing the right segments of customers on the deposit side. The coverage is getting better. And also, I think it's the quality of leadership at all levels, especially the zonal and regional levels. We are able to touch base with the right set of customers to get the business. So I think that's going well, and that will continue. In terms of rates, I think the rates are still elevated in the system. We hope that will start coming down in the second half of the year. And if you look at our cost of funds is probably similar or lower than many of the other banks in our kind of peer group. So I think we are doing pretty well on the overall deposit side.
Sure. I want to touch upon the advances side of the portfolio as well. There, roughly 18% year on year on the gross advances, but your gold loan portfolio continues to outpace that. Your stated agenda is that you want to eventually bring down that gold loan ratio in the book. Where are we on that, and why is the gold loan portfolio consistently outperforming your overall credit growth?
So, Vishal, I told this before that our stated objective is to bring down gold portfolio around 20% by the end of this 2030, by the end of this decade, by 2030. However, right now, if you have to invest into other businesses, it's a very good ROA and ROI business. And we are investing into various things like people, leadership, technology, and all of that. And we need the revenue against that. And gold is a established business in the bank. We are creating more efficiency out there. We are creating more customers there. And it's a very, very high ROI business. So from that perspective, we want to do well in gold for at least few more years so that we can invest into the other businesses, because there's a heavy investment going on in retail. Our wholesale franchise, though we are doing some corrections this year on the wholesale side right now, but eventually it will start picking up from next year. SMEs already started picking up. So overall, I think gold is primarily helping us in building the franchise from an investment perspective, and hence it will be there for another year or two.
Okay. Coming to the the question of your loan book. Now, I wanted to understand from you, 65% of that gold loan portfolio is coming from just two states, roughly. Kerala and Tamil Nadu account for most of it. Is there any plan to then, within that 20% target that you have, to have more states, or do you want to continue focus on these two states which have been traditionally adding to your gold loans?
Yeah, traditionally, I think southern states are a little easier to do gold loan businesses. Customers are also understands that business well, understands that product well. However, Tamil Nadu and Kerala, we have larger distribution also as we are talking together. Kerala has 37% of our distribution. Tamil Nadu is also quite large in distribution. So it to some extent mirrors our distribution play also. Having said that, in the long run, Western markets, Northern markets, and some of the other parts of the country will do much better on the wholesale side of the business. SME, we are spreading everywhere. So to that extent, I think the new branches which are coming up, especially in the other parts of the geography, we are building them based on liability, franchise, based on other products, etc. So to that extent, you're right that we want to build other franchise in other parts. The look and feel and the kind of floor plates, what kind of things we are putting in the branding, etc. They are very different in these branches. So the future, long-term future, is to build other businesses in some of these branches which are coming new now.
Okay. Final question on the cost and margin side of the stories. Now, you said for FY25, you're expecting CASA to be in this current ratio, which is around, 24-25% of your total deposits. What does that do to your cost and thereby your margins? You're still at 5%, which is a very strong margin ratio compared to the rest of the ecosystem. But what is your expectation?
Yeah, so I think the cost of funds may just another quarter away from sort of becoming flattish because the cost of deposits are going up. Not so much about CASA ratio because that will remain consistent, but cost of deposits will start hopefully coming down by the second half of this year. But the mix and other things also will play a role. So from overall perspective, I think I'll be happy to be somewhere between 4.5 to 5. It will be difficult to be above 5 at this point of time, and it's not sustainable also in the long run because once we by 2030, if we build a much larger franchise with multiple product services, we have to start understanding that NIM will keep coming down and fees will keep going up. So overall ROE we can sustain somewhere between 1.5 to 1.8. So that's the structural build we are creating in the bank. And that will gradually play out, that glide path will play out over a period of time. So this year, I think we should be happy if we are somewhere between 4.5 to 5. It won't be crossing 5.
All right, Mr. Mondal, thank you so much for your for this time that you spared for this conversation. It's a pleasure talking to you, sir.
It's always a pleasure, Vishnu. Thank you.